After the US election, the policy mix is changing, and we are sure that we will get more stimulus coming from the fiscal policy in the US, thanks to the tax decreases, both for the consumer and for companies, that the Trump administration will implement. This reflation policy will be global. We think other countries will follow, and so the positive impacts on the global economy will be significant. We revised upward our estimate for growth on a global basis. Inflation will accelerate also, partially because of the oil prices, which did move up significantly, but also because we are beginning to see wage increases, especially in the US and the UK, where we have full employment. In consequences, we had to increase our bond yield targets. In the US, we expect the Treasury to move to 2.75%, and in Europe, the bond will go to 0.75%. So riding the reflation trade means essentially to be cautious on bond markets, as we expect the yields to go up. At the opposite, riding this wave means to be optimistic about equity markets. More growth will mean more earnings, and that's the fundamental reason why we still expect equity markets to move up. We did not change our country allocation. We are still positive on mature markets, especially the most cyclical markets, the Eurozone markets in one hand, the Japanese market on the other hand. We are not negative on the US market. The Wall Street will benefit from the economic growth, but this is an expensive market from several quantitative valuations. So the markets will continue to move to the upside, but we are less optimistic about Wall Street compared to the other countries I mentioned. We are also neutral on emerging markets, essentially because of the rising interest rates we have, but also because of the protectionist risk coming from the Trump administration. We are making significant changes in terms of sector allocation. To play the reflation trade, we want to increase cyclicals and financials, two sectors where we become positive, and at the opposite, we decrease our recommendations on the most defensive sectors like consumer durables or utilities. The 13th of November, OPEC countries arrived to a compromise to decline their production by 1.2 million barrels a day. So of course, this agreement has to be applied. But it's a positive agreement, and we believe that the oil market, will rebalance earlier than expected before. So we increase the range of the expected Brent prices to $60-50 a barrel versus $45-55 previously. It's positive for the industry. The cash flow generated by the oil companies will increase. This is the reason why we decided to move to a positive recommendation on the energy sector. Well, we are positive on equity markets, but we have not to forget that volatility will continue to exist. Volatility can come back very rapidly. For example, with the number one risk, which will be in the near future, European elections. We have general elections in the Netherlands mid-March, and then we will have the French presidential election in May. After that, the general election in Germany will come during the autumn. But also, very importantly, we have risk about the new administration in America. The Trump administration could raise some issues, especially concerning protectionism. So we have to remember that the Trump administration will take power in January, and there are risks, especially with the protectionist measures that this new administration could take. So volatility could come back quite rapidly. Thank you for your attention.